Good afternoon, everybody, and welcome to Live Market Analysis Macro Edition. We are going to travel the world today to look at the key factors, key macroeconomic factors that could likely impact your portfolio over the next week, month, and beyond. My name is Carl Capolingo. I'm the market analyst at ThinkMarkets Australia, and it certainly is a pleasure to be joining you. The agenda for today is very simple. Over to you, your questions versus my technical and fundamental analysis and drawing upon now. How old am I? How long have I been out of uni practicing as an economist? Over 20 years of my experience in the markets as an economist. Let us head first and foremost to the charts. And we'll start over here. I've got the Nasdaq on screen, waiting for your requests to come through, obviously. But while I'm on the Nasdaq, we might as well do some analysis. And we can see that, well, it's really par for the course now, isn't it? It's almost becoming, dare I say, a little bit boring, the old Nasdaq. And I don't know, do we prefer this, or do we prefer the excitement we had back here, where we weren't quite sure whether this new bull market, this fledgling bull market at the time, was the real deal? And as you know, I started to get bullish. Oh, I don't know, go check the tapes. I think it might have been on this first push up here, but certainly here, I was very much in the media on a regular basis saying, hey, everybody, I think here I said the bear market is over. And I'm quite certain here I said the bull market has begun. Okay. Exciting times, now boring times. Give me boring any day of the week. The trend is very much intact, as you can see here. Short-term trend, that's the light green zone. If you don't know what they are, I do get questions on these all the time. 21 exponential moving average. You can see over here in my parameters. I don't have any secrets from you. And the 34 exponential moving average. Excellent at measuring the short-term trend. I mean, you can go pick your own moving averages, but find ones that basically sort of line up with where the short-term trend in an uptrend tends to terminate and turn back up. And then in a downtrend, we'll find an example through here where the uptrend tends to terminate and then it turns back down. Okay. And these are just the ones I know they work. I know they work over and over again, regardless of the time frame. So you could be using a daily chart anywhere down to a 1 minute chart. It still works. And I know many of you have already tried this and confirmed this for yourself. Or you could be looking at the Nasdaq, or you could be looking at any stock and it will still work. In the longer term, we use the 144 and 233 EMAs. So we're really contrasting the long-term trend versus the short-term trend. What are the big investors doing? What are the shorter term traders doing? They have very different views and very different goals in life, don't they? So the longer term investors, they're looking to sort of buy the big dips on the way up and sell the big rallies on the way down. And short term traders doing much the same thing, but again, on a far more short-term basis. Okay, so we've got the double green. It's a traffic light system. If you haven't seen this before, obviously green is go for going long, but we do have this amber phase where we're not quite sure. And then we have this dark pink. It's not red simply because it's harder to read red on black or black on red in the charts with my labels. But we go dark pink or light pink for the down. And then you can just illustrate how it works going from an uptrend to a downtrend. Let me get rid of him. You can see there, green is good, is go, and then we go amber, we're uncertain. And the other thing you want to watch out for is that obviously these zones support the price on the way up, resist the price on the way down. When you see the break and the test and then the fail, that's when you get your trend change. And then here, the break, the test, the hold, and up she goes. The next thing we're going to do is look at our price action. Obviously, we want to see high peaks and high troughs, and it all looks that way. There's nothing so sinister here to be too concerned about anything at all. And then the final flourish is the candle. So the price action, if you're not sure, we're just looking at how those peaks and troughs relate to each other. And ideally, we're seeing that the last trough is at or above the second from last peak. I want you to memorize that. Type it on a piece of paper, stick it up on the wall where you do your analysis. Good price action is last trough at or above second from last peak. It's a really easy sort of rule to remember. Now we're getting a little bit of compression here, so it's not exactly that, is it? But certainly it is through here. You're going to have little pullbacks, and I think we're just responding to this little point of supply with the previous compression. Final flourishes of candles. We want to see white candles. We want to see lower shadows. Are we seeing white candles and lower shadows? Predominantly, yes. So this is all hunky-dory. Last night's candle was fine. Lower shadow greater than upper shadow, and I think it's a little white body, if I'm not mistaken. Well, at least it's a bit of a doji. So stay the course on the Nasdaq. Let's do a little bit of a tour, and I might just click here. We don't often look at this one, but this is Nasdaq 100 equal weight. So we're sort of democratizing the Nasdaq 100 by saying, well, every stock has the same impact on the index, instead of saying, well, Apple has a bigger impact because Apple's bigger than probably the next 9 stocks in the top 10, if you get where I'm going. So that all still looking very good. There's many arguments out there about how, well, it's only just a few stocks powering the Nasdaq. Certainly not the case for the Nasdaq 100. I know the composite is nearly 5,000 companies versus the 100. But we can look at some other broader measures of the market. And when we do that, we see that the Russell 2000, which is, for me, the best and most broad measure of what's going on in the US, really on the ground in the US economy, is starting to improve. It's nowhere near that sort of trend we saw in the Nasdaq. In fact, really, until we get above 2030, you wouldn't actually say the new bull market has begun here. If anything, it's still bear market. We're still in a bear market on the Russell 2000. I'm quite confident saying that, but some of the arguments that it is a strong bear market are certainly dissipating. We're moving above that long-term trend zone, which in itself has gone back to amber. That's a positive. Short-term trend looks pretty well established to the upside, but it has done it in the past. I mean, let's face it, here and here were 2 false starts, and the big question becomes, well, are we just in the midst of another false start? And looking at the Nasdaq and looking at, say, the S&P 500 equal weight, I'm going to say more than likely not, but hey, I can't tell the future. And again, we're looking at equal weight indices here, and they're all looking pretty good. I have said to you in the past, if there's going to be a problem, it probably will come from this area of the market, which is the banking index. It hasn't made any meaningful rally, and that is disturbing. That is extremely disturbing. This is really the dead cat bounce. When you drop dead cat from a great height, how high does it bounce? Not very high. And therefore, it's, in the market terms, this is prone to going lower again. So not out of the woods, but again, there's nothing so sinister here just at the very moment, with high peaks, high troughs, white candles, short-term uptrend, to suggest that it will undermine the building exuberance, not irrational, but building exuberance in the rest of the market. Then we like to look at, say, stuff like Skew, which I know it's all dots there, so maybe we'll head over here and look at the Skew index. We'll look at lithium very, very shortly. There's a Skew, still relatively high, but I don't think it's at a level where we're panicking just yet. Often the Skew represents hedging activity as well. So if you're going along, you'll often hedge yourself by those far out put options, by buying some of those, and VIX is fairly benign. That's a little bit of a US wrap up. I won't head around the world because I'm sure I'm going to have some questions from you about the rest of the stuff, but if we can, maybe just do one more and just bring it home, obviously. How does it look here in Australia? If you're listening to me internationally, I am based in Australia. I won't spend much time on this. There's really just no need. It's just one of the most boring charts out there. Boring in a good way. Is there boring in a good way? Well, there are plenty of sectors within the Australian market right now, which we investigated on Tuesday. We found so many buys within this chart, didn't we, on Tuesday, which suggests that there is this underlying bullish tone. So maybe it is not as bad as it looks here. But I would say, look, nothing to see until we're above 73.92. And then I think you're going to start to feel the media turn, and a lot of the talking heads that are still very bearish about Australia and the Australian economy, they're going to probably start to turn a little bit more bullish, or maybe more bearish. Who knows? Some people are just always bears, aren't they? They're just bears no matter what. I'm a bear in a bear market. I'm a bull in a bull market, and in a sideways market, I go away and do something more constructive with my time. This is a sideways market here, but anyway, underlying themes probably still okay. All right, let's head over to your questions, streamers. If you've got them, find the chat window there and figure out how to do it. Kirsty's, it's a great place to start, probably the most interesting place to start. Carlo's got this question as well. In fact, Nishan also has this question. So let us head over and talk about gold. Actually, I'm going to go here because, as you know, I have I have my scratchings in different charts, and this is where I keep my gold scratchings. I was about to say, let's look, before we zoom in, let's zoom out. So let's over here and let's have a look at the gold weekly chart. Okay, so it's gold weekly. It's still quite sideways, isn't it? And that was the pause there. So I'm not seeing, this clear clean price action, for example. Plenty of supply, 2073, 2070, and haven't labeled this one yet, so let's do it now. So let's copy, paste that one over. And if you do follow me on Twitter or on any of the media outlets where you see my charts, all of these labels are done manually. They're not automatically generated. I should get some AI to help me out on this. But that's going to go 2073 as well, because I round up, not down, for a peak. And actually, well, there you go. I don't have to change it. So it does really illustrate just how important an area of supply this is. And psychologically going forward, it will continue to be an area where traders will try to supply. They will attempt to supply either in terms of people who are long, who got down here at 1900, were quite annoyed, frustrated by the fact they were buying at 2000. So people caught on the long side may well look to supply into that zone to undo that mistake. But also short sellers. I think, there are plenty of short sellers out there would look at this and go, well, it's a no-brainer to short this up around that level. And don't forget, short selling is the act of selling first and buying back later. So selling is supply. So short sellers may well be supplying there. So, I think that's a really interesting chart to look at to give us a little bit of perspective on what we're experiencing now. I won't go back, but do note the long-term uptrend was very much intact. In fact, we'll go back. Look how well, again, it doesn't matter what periodicity you use, these trends still work. And here in the short term, look on the weekly chart, both of these moves terminated almost perfectly at that light green zone. And you can see here going through the light green zones, as it makes sense, it would on the daily chart, but then the light green zone on the weekly often corresponding to the dark green zone on the daily, okay? So all hunky-dory. Last time we looked at this, I think we said we were neutral. I think we had a little bit of a false start going long here perhaps, and then we, maybe here it was, I think at the start of this candle it was white to start off with, and then it went back down. Maybe this was our false start. We went back to neutral. Look, if you asked me yesterday, I would have said it's building towards a nice pop, but today's the day. That's the confirmation day there. So if you're not long gold, I would happily go a plus 1/3 here, plus 1/3, and that is whether you're trading it on a CFD contract, for example. So you can do that in here. This is the ThinkTrader app. Of course, if you're listening to me, I'm coming to you courtesy of ThinkMarkets, and therefore I have every right to show you our products. And we're just going to go, you can go XAUUSD, XAUUSD, I should say, because XAU stands, or X is the spot. X stands for spot in financial markets parlance. AU is obviously the chemical symbol for gold, and then USD, we're comparing the price of gold to US dollars. I want to come back to this later on because I think we've got a trade here on corn of all things. But let's have a look at gold. You can see the exact chart I just showed you. So you can do all your technical analysis here. And to get a trade going, we simply open this little window out here, and this is our dealing ticket. And you could go to the contract specifications page and try and figure out what, how big the contract is and all that sort of stuff, but that's all very boring for me. I just do it this way. This is how I figure out what my exposure is between this plus and minus and these two here. And let's say, I'm new to trading gold, never traded gold before, but I want to get involved, and I'm prepared to risk all of $50 on this trade. Okay, if it all goes wrong, I don't want to lose more than $50. Let's look at that from that perspective. Okay, so first and foremost, like James Bond walking into the Monte Carlo casino, first thing, what does he look at? Does he go for the beautiful curvaceous brunette standing over there at the bar? Does he go for his evil nemesis at the baccarat table? Does he head to the bar and get himself a martini? First thing James Bond does when he heads into the Monte Carlo casino is he looks for the exit sign. That's the first thing he does, because he wants to know if something goes down, he knows how to get himself out of that situation. So when you're looking at a trade opportunity, often we go, I'm going to make all this money on this trade. Take a step back. First thing you should look at is go, where will I get out of this? Because that's going to help me understand my risk and how I'm going to work out my trade craft, how I create this trade. And I think the most obvious place to set your stop is just under here, isn't it? So I'll get my little crosshair. I can whack it on there, and I can see that low, which is up here now, it's going to appear here. Obviously, I can't be in two places at once. 1893, and we want to give it some room. There's a couple of ways you can do this. So let me go back to here, because I probably could get in there, but it would take me too long to find it. But what I will go here and go into my indicators here. I'm going to go for volatility, which custom indicators, indicators. There we go. Average to range. There we go. We're going to go insert. And what we're doing here, look, you can use 15. It doesn't really matter. Hope you can see that at the bottom of the screen. Go escape that, click that, right click. Parameters, I prefer to use 21. That just gives me a month. You can go longer or shorter, but we're saying, well, what's the average volatility of gold over the past month? And we can see we get a reading here on any particular day. Okay, it's moving around about $22. Okay, so ideally, you don't set your stop inside, and I say 2 ATRs. And then I'd say go at least half an ATR beneath the last trough to allow for a bit of volatility. Okay, so it's a bit of an objective measure. You could use something subjective, like, well, I always set my stop loss $2 beneath the trough, or 2%. I'd always go 2% over $2, for example, because I think percentage is more effective, or takes into account price change over time. But an ATR is a nice objective way of doing it. So a couple of things going on here, okay? And I know we're not analyzing stuff here, but it's stuff you need to know. You need to know how to create a trade. So let us go back to here. And if we're getting in, and the current price is 1960, we need to have our stop loss at least, I say, those 2 ATRs away from the current price, allowing for the 2 times an average daily movement. So today, right, think about that. Today, having an average range of 2 days to not hit my stop. So 22 times 2, and let's round it up. 22.50 times 2 is $45, isn't it? So as long as I'm not setting my stop loss within, say, 1925, I'm okay. And look, I don't intend to set my stop loss inside 1925. I'm going to be below here anyway. So if I'm down here, is it more than 2 ATRs away? Tick. And then if we know that this low is 1893, okay, I'm saying, look, try and go half an ATR beneath that. So it'd be about $11 beneath that. So that would get us up to 22 divided by 2 is 11. 1893 minus 11 gives me 1882 as a stop loss. All right, so let's say 1882 is going to be our stop loss. So it does create a little bit of an issue here, because it says even at the smallest, I can't go any smaller than 1. Some of ours allow us to do 0.1, but this is not the case. Does put into perspective, even at the smallest contract size that I can do on this platform, I'm potentially risking 11464. Okay. A couple of things you can do here. You say, okay, well, that's too much. I need to get this closer to $50. Well, you can go the 2 ATRs. Okay. And in that case, we said that was going to be about 1925. And you can see as I change that, the red line, which represents my stop, is actually changing on the chart. So I get this great visual cue as to whether that is a sufficiently safe stop. And there are some benefits of setting your stop loss there, because here's your big demand candle, right? You don't want to be in it if the price trades back below that demand candle. Think about what that candle means. This is where the market thinking has shifted towards being bullish gold again. If we're trading back beneath the low of that candle, the market shifting probably has shifted back the other way. So why are you still long gold? The other benefit of setting a stop loss where that red line is at 1925, we're allowed to, don't forget from the 2 ATR rule, is that it's above a little bit of a, there's certainly a shadow here, some shadows here. There was supply in the market at those levels. Now that so this is where investors were selling and short selling gold. Now, if you're short gold and you shorted it in that area around 1930, thinking that the trend was down we're going to go. And right now, how are you feeling about that short trade? You're thinking, oh, I don't feel so good anymore. I don't want to be short gold, but I don't want to get out here and lose money. If gold retraces back into that zone where I was actively short selling, that's where I'm going to get out at break even. I'll take my licking. Or I'll take my break even, I'll get out of there. I don't want to take a licking. So anywhere beneath here is also quite good, because we expect that supply will turn into demand. This is a good candle to get beneath as well. Now, watch this. I can actually take this and actually just slide it. And I reckon I can go down here. And probably there is I don't think is any less a valid stop. I think both stop here and here are both valid. One is perhaps more conservative, that's obviously more conservative, and this one is slightly more aggressive. Okay, but I think there are many good reasons to use a stop like that. And now what it does is, and I think that's fine, it tells me, well, 56.23. It's not quite the $50 I wanted, but it's certainly not the 114 at that more conservative stop. So I'm actually going to go with that. I think that's fine. Take profit. I'm going to turn, well, I will turn it off in a second. But what I want to do is just illustrate how easy it is to kind of figure out. Well, I don't think I need to. I was going to say how easy it is to figure out what 1 pip is worth. Well, it actually tells us. So I was going to work it out here. But I don't need to because the information's here. It's even better. So it's telling us 1 pip is going to cost me 15 cents. And because my account's in Australian dollars, that means Australian dollars. If you're in US dollars, it'll say 10 cents. Quite literally, the pip movement is US 10 cents. It's got nothing to do with Australia. It's US 10 cents because we're trading against US dollar. Now, when you convert that back to Australian dollars through the Australian exchange rate, it's 15 cents Australian. Okay. So 1 pip is a US 10 cent move. What is a pip? Well, on our platform, it's always the rightmost of the big numbers. And you can see over here, the big numbers kind of change position, don't they? Depending on which security we're looking to trade. But for gold, the 4, that 3, it's a 3 now, and that 5, they are what represents a pip. And you can see we've got a little bit of a spread here. It's about 20 pips. So that's going to cost you 30 cents. Sorry, more than that. 20 times 15, $3 effectively is the spread on this. So we look, there's no commission, but because you're facing a spread, effectively there is a commission built into it, as you were, but there are always spreads in the market. So you do have a $3 transaction cost. You won't see this commission. It's just you'll end up paying it on your way out by default. That's just how the market works. I'll take the profit off because I don't want to set that. I mean, you could set, for example, a profit target somewhere up towards that point of supply around 2073. That's your choice. I'm not going to do that. I'm going to play it by ear and let the candles tell me when it's time to get out. Okay, so I'll leave that one off. I will leave the stop loss on because I want that peace of mind. I want that comfort to know that if I'm, gold trades 24/7. If I'm not around to see it, I'm going to have the platform get me out of gold. There's really nothing else to do. If you're happy with the trade, I'm happy with the trade. I'm not fussed about what this candle's doing because I'm trading based upon yesterday's candle. Really, I should have been in this about $3 or $4 ago. You just click the buy button and off it will go. Place the order. And I get a little sound. I don't think you heard the sound, but it's come down here. Now, if you remember, a few weeks ago, we placed a US dollar versus Japanese yen order, and that is one we trailed our stop loss up to. We ended up making a little bit of profit on that. So if you're wondering what happened to that, that got knocked out at a bit of a profit. We didn't quite get the top on it, and we'll see why when we get to that trade. But what we've done there is, I think, pretty handy. It shows you how to go from analysis into executing a trade and understanding really how to set your risk management parameters as well. So let us head back to the gold chart here, and I just want to get back to this one. Where could we see some supply? Look, 1985. It wasn't a massively important level on the way down. I don't expect it to be a massively important level on the way up, but keep an eye out for what might happen there. Otherwise, I can't see any reason why, as we bounce off this long-term trend zone, as we have done in the past and as we tend to do, why we can't head back up towards those highs. And make of that what you will for your gold companies. I've talked about, actually in my Tuesday Twitter list, a bunch of them came up. And there was nothing in the gold chart. This was the most interesting thing. There was nothing really in the gold chart to suggest why so many gold companies came up on my Twitter list there. And if you don't know where that is, I'll just quickly show you on Twitter. Each day I publish a list of my favorite ASX trades. And if we head back to Tuesday, which was the 11th, you can see over here, Evolution, for example, Emerald, and New Star might be in, because there's obviously 3 parts of it: Regis Resources, West Gold Resources, New Star, Bellevue Gold, De Grey Mining. So many precious metals companies actually come up in that list. So that was quite interesting. That occurred. It showed you that the big money was moving into stocks before the gold price moved. Now, it often begs the question then, well, what am I better off trading? Am I better off trading gold stocks? Got plenty of choice there. Or am I better off trading like gold CFD, like I just saw? Well, partly the problem comes in, I know this is probably not a great example today because it is actually up, and it's up, I think, because of a bunch of short covering. That's yesterday's close. Perseus Mining is a great example of a gold company that keeps going down because it's got all sorts of operational issues, even as the gold price has gone up. I know it's rallying today. Okay, but if we would hate to be in a position in 3 weeks' time where the gold price has gone to 2073, or in fact broken out at 2073. It's now 2100. Big tick, tick, tick there, and then whatever gold company we choose to have owned. Resolute, I think, looks very good. SPM was the one I was going for, the awful one. There you go, not Resolute. Look at that. What a shame it would be if we get that call on gold right and yet don't make any money out of it because the gold stock we got is a piece of junk. So I always say, should go back here. There's your St. Barbara chart, another Australian gold miner. Wouldn't it be a shame if you got the gold call right and then didn't make money because you got the worst gold stock? Okay, let us head over to silver. I think silver needs to be discussed as well because it has had also a really strong move up. And let me find it in my list. There we go, down here. There is silver. I think gold's the better chart of the two because of the long-term uptrend was still very much green and it had held much better, but that is an unambiguously bullish candle there on silver. So yeah, no objections if you're looking to get into that one. Obviously, I won't go into it again, but I'll just show you that you can obviously trade silver here as well. It's just XAG this time, USD, and you go through the same process of working out the trade on that, which I won't do. One thing that is immediately obvious is that you've got a much larger pip cost on silver than you do gold, and that's because you have to have a minimum size there of 50. Okay, so if you've got a smaller account, gold might be the better way to go. All right, your questions again. Next one here is on the GBPUSD. So let's do some currencies now. And I know I'm jumping around here, apologies for that, but I've got different charts in different places. So GBP USD coming up here, and this one is for Perry. Looks fine. I think it's one of the better looking trends out there. Many of the trends we've been following are starting to turn around, and I know, Perry, you would have obviously been all over those in terms of extricating yourself from that situation. So the US dollar versus the Japanese yen is one which we took from, I think, on this candle. It went to here. We trailed our stop up to it. It ended up being a tiny little profit, and it got stopped out there, no problems. And that's why we do have that stop in place, because you're not going to be up at 3 a.m. Australian time to execute that one on the fact that it was a black candle, right? So this is very much changed. You can see here, these black candles are not mucking around. And when you do get those types of moves, such consistent moves, it sort of looks like that. They're not the ends of trends. You don't say, well, that's gone down too much, it needs to go back up. It might bounce a little, but they really tend to be the beginning of trends, not the ends of trends. It's particularly in Forex, which the thing I love about Forex, you do get some really great trends. Once they're in place, they tend to go for a long time. So we know that when it comes to the interest rate outlook, Perry, you know this as well, because I'm sure on your TradeView window you've set this up also. We do know that the UK bonds, until last night actually, and it's worth talking about. This is something you need to consider, Perry. Maybe the pound might not be the best way to go because of the severity of that reversal candle there. That's disturbing. What is interesting, if we go to say the European yields, they weren't as bad. I'm using the German yields as a proxy there, and then the US yields we know have come down also, and you can see far more substantially than the British yields, and that's why the trade is setting up there for you, Perry. But also the yen, we've seen a very small rally on the Japanese yields as well, so exacerbating that switch there. I don't have the Swiss yields. I probably should get them up and find them. That's the Aussie one there, also pulling back. So we're trying to see here, we want to see the most bullish looking yield chart, which will give us a bit of a clue as to where we want to go with our FX trades. Okay, ultimately the charts have the final say, but just thematically. And as I said, I don't have the chart of the Swiss yields, but I suspect they are holding up better than many of the other yields there. I might just turn myself back on there. So this is the one I think you want to look at, Perry. I'm not saying that you can't do this one. Well, sorry, I'm getting mixed up there with the yen. This is still the strongest against the yen. So I want to show you the, sorry for jumping around. That's the sterling. Perry knows what I'm talking about. So the sterling yen trade, this is a trade which we've been on for a hell of a long time. You can see why. I think this now is under some serious pressure. Obviously, it's still holding the green zone. I think if you're managing your risk, you would have taken some risk off the table. I think you'd still have some skin in the game on the basis that this is still a very strong overall trend, but have managed some risk. What I was trying to point out, Perry, is maybe the Swiss versus the yen is probably the best bet in those carry trades. Okay, getting back to your question, well, actually, that's probably one of the better looking ones. But then I suspect, based upon this theory, that big candle on the sterling yields there was a bit of a problem. I suspect I'm jumping in the wrong place here. EURUSD I'm looking for. I suspect this one might be better. Okay, so favouring maybe a Swiss versus the US dollar, which is, well, it's going to go inverse here, so everything's going to turn upside down. Okay, well, look at that. There you go, Perry. So what we're trying to find here is the currency that is the strongest against the others. And what I'm very poorly explaining is that it's the Swiss. Okay. I think Perry's nodding his head somewhere. So watch the Swiss yen for the yen crosses, the carry trade. Euro, I think, looks stronger than sterling. And it all comes down to that big reversal candle in the sterling, but probably fine either way. Happy to go plus 1/3 on each of those, and I do want to put these in the system because it's great for us, I think, to be able to come back and look at them again. So I'm going to very, very quickly. I won't do all the risk management stuff unless somebody says, "Hey, Carl, please show me how to do the risk management," because I want to get through all of your requests. But I actually, look, no objections to GBPUSD. So let us find that one. And you can see here, again, 15 cents per pip, so nice and small. If I'm going to set a stop loss, look, I'm a bit of a ways away from the light green zone, but I think, you want to come at least underneath the bottom of that candle, and at least under this peak. So probably somewhere around there. So let's go 127.97, 1.2797, $32. Is that something that you could do? Decide if you wanted to be more conservative, probably under this giant candle here. But then you say, look, if it's come back all that way, I'm going to have other exit signals. I probably don't need to be that conservative with my stop. That's the most conservative stop there. Okay, and that's only $64. You can see here. But let's go for. Well, I don't mind the idea of being underneath that shadow, and that's only $40. So let me just put that on. It's not going to change necessarily my contract size. Unless, as I said, let's say you're risking $50. But if you were risking, if you wanted to go closer, let's say there, well, and that's 30, you could actually go 2 contracts if you're happy with 60. If you get where I'm going with this, obviously the bigger the contract size, if we're going for the same risk amount, potentially we've got more upside. If we're fixing our risk at a particular amount, okay. So you can see how the relationship between amount and where you slide this to, right, impacts what you want to do. Let's go with, I'm tempted. No, let's go with that one. And let's just click the confirm buy here and place that. Just get it onto the platform. The other one was the EURUSD, which I said also looks good, and let us very quickly work out. So clearly, I think, look, anywhere here is probably fine. So let's go 109.87. and see how that looks. 1.0987, $23. I'm pretty comfortable with that. So I can go 2. It's still underneath my $50. And again, I'm just using $50. You know what your risk level is. And I don't want to do any take profit or anything like that. So let's just click the confirm buy, get that one on the platform, and we'll come back in future weeks and see how that one's playing out. And then the Swiss yen was the other one I wanted to do. And hopefully you can see just how easy this is. CHFJPY for the carry trade. Let's get a carry trade going. And this one's actually, the stop's actually quite obvious here, isn't it? I think, let's give that a little bit of room. Let's go maybe just see this white candle here. Let's go 157.27. So turn that on. Let's see how it looks in terms of our risk. 157.27. 57.27. Get that right, Carl. $28. Could you do that? If you're feeling like 57's okay with you, and then confirm buy, and we'll put that order in as well. So those are, for me, the 3 more interesting potential FX trades out there at the moment. Let us head back to here. And Perry wants to talk about shorting the USD CHF. So Perry was all over it. And I think you can. It's just a light year away from my light pink zone here. No objections at all. I mean, that's where the strength is in terms of the Swiss / the weakness. The real weakness is in terms of the US dollar, and reflecting back my discussion about trying to isolate, really trying to narrow down the currencies that fund managers are targeting here. Okay. The obvious thing to do, I think, for FX traders, and I think where they make mistakes, is they go, hey, I live in Australia. I should be trading the Australian dollar, US dollar. And I just can't see the reason to do it. I can see this could go up, certainly. It's trying to break above long-term trend zone, but it's just not attractive as any of those other setups we saw with their well-established long-term trends, and they're building short-term trends, and they're great price action, great candles. So don't fall into that trap as an FX trader. Go, well, why would I trade the Swiss? I've never been to Switzerland, right? I've never even seen a Swiss franc. I have to trade the Aussie. Don't fall into that trap. It's about understanding this big picture, these macro themes, and then finding the best ones to be in. Okay, and I don't think it's the Aussie right now. And ultimately, it comes back to this: the fact that if you look at where these rates are, because FX moves on carry, right? Carry is just how much more you can earn in one currency than the other. And you can see we've come back to, say, 4.7% here. And then the Aussie is at, what are we at now? 4.12. And it kind of feels like, that there's some carry there for the US dollar. Well, there is. But when you sort of think, well, the Fed's maybe got 1 hike in it and the RBA's got probably 2, then it's not about where it is now, it's about where it's going to be in, say, 6, 12, 18 months' time. So the market's kind of saying, looking at that Aussie dollar, US dollar chart, is that they're probably going to be very similar. And that's why you're seeing the Aussie very sideways at the moment. Okay. Anyway, let's keep moving. We're going to go to the wonderful world of crypto now for Craig. And we're going to look at Solana, which is actually, for some unknown reason to me anyway, trending higher. It's one of the few cryptos that can call itself as being in a short-term uptrend on my chart, at least the little light green zone. I think if you've got it, hold it. I don't have any Solana personally, but yeah, it's not knocking my socks off. I'm not going to run out and buy it. Obviously, the trends are still horrific. The long-term trend is trying to change. You can see it's gone to amber, but it has gone to amber in the past, only to be beaten down before. And I think when you look at how effective, that long-term downtrend is, I don't think you want to mess with it. And if we look at maybe the start of the last trend, hopefully we get enough data to do it, you can kind of see, you want to see it do this sort of stuff. And if Solana starts to do this sort of stuff and really make this light green zone, there's your amber, there's your green, I'll be happy to be all over it, but I just don't see it right now. And you might say, well, Carl, by the time it does that, it's going to be 28. Look, it could well be. And this is the problem with, it's a real problem I have, is not knowing what's going to happen next. Unfortunately, it is one of my major deficiencies, is I can't see the future. So all I can do is say, look, based upon the probability on screen, it's not something I want to buy, I can see a reason to hold it. And I'm happy for it to buy it at 28 on the way up. And I know crypto experts who are far bigger experts than me say, oh no, you always buy low and sell high, whatever, but I'm a trend follower, so that doesn't work for me. I need to buy high and sell even higher. Look, a couple of cryptos that look half decent. I think Tron looks half decent. Again, I don't think I'm a buyer, but I'm just trying to show you where there are some positive trends. And the other one which looks quite decent actually. So we've gone from not just yet on Solana to half decent on Tron to, oh, that's not it. I can't remember. It's EOS. I thought it started with an E. I saw it this morning. No, maybe I'm completely mixing it up with something else. I thought it was ENS. Well, forget I said that. I can't recall the quite decent one I saw today. I should have written them down. I know AAVE falls into the category of half decent. You can see there's the short-term uptrend. And the best one escapes me. I'll have to, we'll cover it next week. I'll put it in Twitter. SNS? No, I'm sorry. I've lost it completely. I'm not doing a lot in crypto at the moment because most of my stuff is underwater. I do own PIC, but I do know, I thought it was that one. I mean, that maybe it was that one, but maybe I've just oversold it. That's half decent, isn't it? Half decent. Maybe it was that one. What stuff I own? Look, I still there's light years in terms of my holdings between my Bitcoin and Ethereum holdings, which are quite large, and everything else. Okay, which I quote unquote did for fun, and I say did as in past tense because it's rubbish. But let's have a look at Bitcoin while we're here, which is I'm a happy hodler here on Bitcoin, and I just don't want to be that person that I shouldn't say that. If it goes to $1 million, I just don't want to be that person that looks back and said, why didn't I? I mean, I've got some. If Bitcoin goes to zero, I'm not going to. It's not going to affect my financial situation too much. But I want to have enough skin in the game that if it goes to $1 million, I want to be able to say, yeah, that was a good call. So that's my rationale. I've got nothing to do with trends for owning Bitcoin. But the trends are fine. So, short-term uptrend, long-term uptrend. The price action is congesting in an area where we have seen previous supply. And that makes total sense to me. And in fact, if we look a little bit further back, it makes even more sense because, let me grab that and just go here. So you can see why we're congesting at this zone. We're dealing with the supply really that was around or has been around for a long time. So compression in price action is fine if there's a good reason for it. I do believe there's a good reason for it, so I'm not too fast. Look, if it was to start to trade beneath, say, that low there, say starting to print and close, not just print, close beneath, say, 29,400, then we've probably got a bit of a pullback. I'm going to tell you though, if it prints, say, or it closes, say, 31.6, I think this could be the renaissance, the next big move for Bitcoin. That would be nice. And I personally, I could see myself adding some more money to Bitcoin if that was to occur. I'd quite happily increase my holdings in Bitcoin, and my other big holding is in Ethereum, simply because I figure they're the two most likely to succeed. That one's not looking as good, and more we're seeing, aren't we, this idea of Bitcoin dominance. And the Bitcoin maxis would have told me not to diversify into Ethereum. They'd say, I told you so, Carl. You shouldn't have mucked around with any of those altcoins or Ethereum. You should have put it all on Bitcoin. Stupid. And right now, I agree with them. Let's have a look at the dollar index for Carlo. And I think it's a really interesting chart here, Carlo. And we must talk about it because we've talked about so many other Forex pairs, haven't we? But you can trade this. So you can try and figure out, so draw that there because actually it's probably a good place to draw it by accident. You can try and figure out which currency pair to do. And I think we spent a great deal of time on that. Hopefully there was some value in that, doing that for you. Or you can say, look, the US dollar's cactus. I'm going to just short the US dollar through the US dollar index. So you can actually trade this. And that looks pretty awful. So, but Perry, back to you and maybe that Swiss trade. Well, Perry's kind of saying, look, I can do better than the aggregate. This is like an ETF, isn't it? Effectively, we're looking at an ETF on the US dollar. And Perry's, like we do with ETFs on the market, some people love ETFs because they've got instant diversification. You know, it's sleep at night. If one of the stocks goes poorly, more broadly, the ETF will be fine. But the drawback of that is, well, if you can pick the best stock within the ETF, that's better than only the ETF. So Perry's kind of saying, look, I can pick the best currency against the US dollar to trade. For other people, they might find this a better vehicle to do it. So what we can do here is head over to here, and if we go USDX, where is it? Khan US. I know 100% we've got it. US dollar index. There it is. USD index. Right there. Wasn't that hard to find, Carl. There's the chart. You can see straight away. So let's get a trade on this. And I know they're going to be highly correlated. And you can see here, these trades are all in a losing position because that's the spread. Straight away, we're going to start in a losing position. Don't panic. That's normal. As a trader, if you're buying BHP, ladies and gentlemen, and you buy BHP at $45, you're losing money straight away because the bid is going to be $49.99, $44.99. You know that. Okay, we're okay with that. So let us do a trade in US dollars. Now, what I'm saying, by me putting on these trades, there is some correlation in these trades. And this is where you need to be really careful when you're trading Forex. But similar, if you've got all gold stocks in your portfolio, they all go down at the same time, don't they? If you're shorting the US dollar against a bunch of different currencies and then you trade the US dollar index, you're loading up on the same theme. So what I'm not showing you here, please understand, I'm not showing you a balanced portfolio. I'm not telling you what you should do. I just want to illustrate the mechanics of a trade and then follow them through over the next few weeks. So if this goes wrong, they will all go wrong. And I know that, okay? If they go right, they will all go right, and I'll take absolute credit for that. I'll be crying about it, all right? Let us quickly do this one. So you can see where I started. The first button I click is on my stop loss. That's the first place I go. I want to know, let's say again, I'm risking $50. Where is a good place to set it? And this big red candle is a good place to start. See that little trough there? Because don't forget, troughs, old points of supply tend to act as future points of demand. So if I'm going around here, just above that, I should be fine. And again, you can do your ATRs and all that sort of stuff. I'm keeping this very simple. 101.63, let's call it 101.63. So it's as hard as typing in 101 this time, 101.63 as my stop loss. And you can see it's invalid, okay? And I've made a mistake. Okay, very quickly, streamers, what's my mistake? And this is so easy to make. What's my error here? Why is that invalid? Yes, I want to set my stop loss at 163. Why is the platform saying, no, Carl, you've blown it, mate. This is not the way we do it. Nicholas nailed it. Haraju's nailed it. I have to click sell. I'm not buying this thing. I'm selling this thing. So because I'm selling, I sell first. I click the sell button. This is short selling, ladies and gentlemen. This is how hard it is. I click the sell button first, and at some stage down the track to close the trade, I need to click the buy button. That's what short selling is. And when FX is the best because there's no long or short because you're trading against two different currencies. By definition, if you're selling a currency pair, you're going long one of those currencies. Okay, this whole idea of long or short just goes out the window. I'm just selling first and buying later, or I'm buying first and selling later. So because I'm selling first, that stop loss is now above my entry price. Okay, if I'm buying, you can see my stop loss. Okay, it's in the wrong place. The stop loss for a short trade needs to be above the entry price. Okay, so now we are, and we're going to $23. So I can actually up this a little bit. I'm going to go to 20 because I'm still under my 50 here. And now let's, I don't have to actually, this is quite deceptive, isn't it? A lot of other trading platforms, you click the button to make it happen. Here, we have to click the blue button. That's fine. And in we go here. There's our new trade coming down here on the US dollar index. Sorry, there it is there. And we're looking at about $1 is your spread on that one. So not too bad at all. The biggest spread I think we had was on gold, which was about $3, but it looks like we're actually making about half of that back already. Isn't that nice? So that is the US dollar index for you, Carlo. He's saying, surely it's game over. Surely it's game over for the US dollar index. Well, let's hope so. Anyway, demo money. We won't be too bad if it goes wrong. Nishan, could you done gold? Oil sector for Nishan. Let's head back to the trade view window here and have a look at some of our energy commodities. Okay, so this is coking coal on screen. I can do that. Resets it for me, and I'm going to go to a line chart so you can actually see what the hell's going on. And what we look, I had a wonderful little time there looking in the world of Forex, but now we're looking at really global economic growth, aren't we? We're looking at what's happening in China more specifically, because they are the world's largest steel producer. Somebody might say, hey, India's close, or getting closer, but I'm pretty sure China is still the world's largest steel producer. Let me head over here and show you the most important chart for those of you who are looking at even coal price, even thermal coal. And this is the Chinese Mainland Property Index. I tweeted this today, and it looks bloody awful. No redeeming features here, ladies and gentlemen. With all this talk of stimulus, the Chinese property market is in trouble. And I'm looking at that and I'm going, why isn't this more in the headlines? Why are we not getting these, China property meltdown headlines? And maybe that's why we saw at the start of this presentation, we talked about why the ASX 200 is just so rubbish right now, because our hopes are tied to this. That looks horrendous. Now, some of the other, don't panic, they don't all look as bad as that. The Shanghai Composite Index, it looks a little bit better, doesn't it? Not great, but a little bit better. Now we're not just looking at the property stocks, we're looking at a broader section of the market. And the China A50 is looking a bit better, okay? But ultimately, when we do look at something like coking coal there, we're kind of understanding why it does look a bit awful at the moment. And then if we head over here to our thermal coal, now this is Newcastle thermal coal. In fact, that one's breaking down. It was very interesting for me to hear a bunch of talking heads in the media talk about they're like coal stocks at the moment. I kind of can't see it at the moment. We did get a blip up of a rally in some of those coal companies, but I'm looking at this and I'm thinking, geez, that if anything, that's heading lower. I can't really see, again, any redeeming. In fact, that's almost the chart of that Chinese property index, isn't it? Right there. So that has some real issues, I think. If you're a coal bug, you've got some problems. Now, contrasting that, there's a little bit of a rally here in Brent and in West Texas, but I don't think enough yet to get me excited. But it looks interesting, looks promising. But we've seen promising rallies in crude before that have flamed out. And I do think you must concede, even if you are an oil bull, I think you have to concede that until this until this long-term trend changes, that you must be very, very cautious on that. That's the West Texas there. Not a lot of movement on old natural gas. I know we've tried to pick the bottom of this, and maybe it was around here. It didn't do very well. So burnt once on this one, a little bit gun shy. And again, I want to see it print some nice high peaks and high troughs and, start to challenge that long-term trend before I take the punt. I'd happily take the punt on that one. We can trade it on the platform. While we're here, it is technically an energy commodity. Let's look at uranium. Because I know somebody will be asking me about that. I always get asked about this one every week. It has pulled back, and the energy, our local uranium stocks have pulled back somewhat. They've gone a little bit quiet. But otherwise, I can't see anything too sinister in that chart to suggest we're going to get any major reversal to the downside. So for the energy bulls, you've persevered, haven't you? You've come this far. I don't think it's time to give up the race just yet. Hang in there, uranium bulls. Where should we go next? We should go to iron ore. Probably heading off a few requests here. And again, we saw the problems we're having in that Chinese property index. But iron ore, actually, there you go. I was surprised. I haven't looked at this chart for 2 weeks because we haven't done this session for 2 weeks. And look, it's okay, actually. It's better than I thought. But it's not something I'd be rushing out to go long. And copper as well, which we can actually trade on the platform. I'm not going to set up the trade on this. It doesn't look terrible, but I don't think it's warranting me going along at this stage. Certainly not with that long-term downtrend still showing dark pink there. But some nice candles. Look, if this was the start of the next big copper bull run, I could look back and go, yeah, I can see how that could have happened. But it's not good enough yet for me to jump on board. And of course, we would be remiss in discussing commodities without talking about everybody's favorite. And we're going to head over here and have a look at lithium. Firstly, lithium hydroxide. Let's zoom out a little bit, get a bit of perspective there. And I have been on record saying that the next move would be the decisive move. Oops. It's not the up move we were hoping for, is it? We were looking at this and we were kind of hoping that the next move would be up and we'd get that continuation of the recovery back up to the highs, but I don't like the look of where this one is headed. We could get a double bottom, but yeah, at the moment, until we start to see this one pick back up, and then probably, in fact, what is good about this is we can actually get a really nice little marker here for when this lithium commodity bull market is back on. We all know the bull market in lithium stocks keeps percolating, but I think we need the lithium commodity bull market to continue to really take that lithium stock bull market to the next stage. And 50, close above 50, it's got to make this a higher low, and then I think we're going to be looking very good. Until then, this actually looks a bit concerning to me. And then carbonate, which has been going quite sideways compared to hydroxide. Hydroxide leading on the way down, just taking a little bit of a blip to the downside there. So I did say I think the next move will be decisive, and that's not the move I think many of us were hoping for. Can we look at the small ordinaries for Colin? Small ords, we can look at it. I just, I'm a little bit reluctant because I just think it's a little bit boring, but I can find it for you. XSO, perhaps? No, that's not it. No, dollar XSO. There it is. Small ordinaries, got it. And let's go here. A little bit of a bounce today. Not terrible. A bit like that Russell 2000 chart, isn't it, in the USA? Far from a rampaging uptrend, far from telling us that, really those animal spirits in the Australian market are back in and working on the market. I'm so sorry for you streamers. I have ignored you, but not deliberately. But I did Kirsty, I did Kirsty's gold request. Vivek saying, hi, Carl. I want to say you're doing a good job. You're giving education about stocks, not stocks today, Vivek, but Tuesdays and Fridays I do stocks. But it's not just stocks; it's about trading, isn't it? It's just about understanding how to manage your risk better. I think effectively, how to manage the risk of buying in a horrendous downtrend. Well, we don't want to do that. How to manage the risk of selling in a horrendous uptrend. We don't want to do that. And then more specifically, how to understand how to tinker with the risk of your trades as well. Not sure what Neil's doing there, but I'm sure Neil knows. The grey mining will be talked about on Tuesday, no doubt. There's some floods somewhere, says Neil. MZZ, not what that one is. Okay, Neil's gone off on a tangent there. All right, stream is done. Steve saying, thanks, Carl. Awesome advice as always. He's got to jump. Okay, no worries. Thanks, Steve. Will I be posting on Threads now, says Nick. Maybe. What do I do? Do I just copy and paste the stuff from Twitter? I can do that, but I don't know how much more I've got to say. MEI for Nick. Nick asked me about MEI on Tuesday. I'm assuming that's it. That's an Aussie stock. We do those on Tuesdays. Do I use an average true range trailing stop indicator, says John. I don't, John, because you already know how I do my stop losses. I set that initial stop because that's my my line in the sand. Right? I can't go past that point because I've set that up based upon how much I'm prepared to risk per trade. After that, in terms of trailing the stop losses, I don't really trail stop losses per se, unless it's on something I can't watch overnight, like a Forex trade. We did that on the US dollar Japanese yen. And that will be quite a wide stop. And it will be just, the only function is to get me out when I can't see it. Other than that, John, my methodology for getting out. It's all about candles. It's all about price action. So I'll find that I find that if one of my stops is hit, it's because I got it wrong straight away. Otherwise, I tend to be the one getting myself out of trades. If it goes the right way, I'm getting myself out of the trade because I've seen something I don't like in the chart. So no, I 100% understand what you're talking about, and I've seen it used many, many times, this idea of that trailing ATR stop, and if the price gets below that. My methodology, we're probably out well before, at least have some of our risk out well before we even have to contend with that ATR stop. Think about that for a second. Nick saying, go and post on Threads. I will, therefore, it's two people have asked for it, so that's the same person. One person has asked for it, so therefore I will now be posting on Threads, it seems. Let me I've done all your questions, by the way. I'm pretty sure I've done lithium. So I think we'll adjourn. I think, hey, I'm at an hour, so let's call it there to save. Let's not save the trees, but save the data banks at YouTube, isn't it? And having just extra gigabytes there for no good reason. I'm going to head back to here and say that obviously, as I have mentioned, if you want to look at ASX shares, a few people requesting them today. That's the Tuesday session. Make sure you register for that. And tomorrow, for me, by far and away, if you've been following my tweets, the most exciting area of the market is the USA. And I nearly put out a short list last night, but I had 1,600 stocks to look at, and I got to see, and then I couldn't be bothered looking at it because the kids wanted me to do something, so I didn't. Leave that with me. I might start putting out some USA shortlists because there's so much opportunity out there. You have to tune in. It's the least attended of my 3 webinars, and I cannot figure out why. Anyway, if you're not a client of ThinkMarkets, you should be, because we are the good guys on the Australian broking scene. You can trade anything you want with us from all over the world, as we just saw, really all from your same account. And I think that's wonderful. Shares, cryptos, futures, commodities, you name it, we've got it on there. Head to www.thinkmarkets.com/au to open an account. Why would you do it? We are an award-winning broker. We've got offices all over the world, regulated all over the world. Your money's safe with us, and you can talk to us by heading to the website, clicking contact us, and there's a phone number there. How about that? You could call us and talk to us, which is very hard to do with the vast majority of our competitors, many of them much bigger than us. Try talking to them. If you're watching me on YouTube, hit the subscribe button to stay notified of any future updates, and hit the thumbs up button wherever you are looking at whatever I produce. It's always very handy if you do that, because it lets me know you like what I'm doing, and I'll continue to do more of it. Apart from that, it has been an absolute pleasure chatting with you today. All the best for your trading and investing until we catch up again. Bye-bye for now. But before you run away, don't forget that everything we've discussed today is general advice and has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important. You should read it. And if you have any questions at all about ThinkMarkets or our products, head to the website, call us, download our product disclosure guide. Bye.